Option trade alerts. So this is for September 2021. Overall, we exceeded the returns of the market by about 4 or 5% in September. Our returns weren't nearly as good as they usually are, primarily because of the volatility expansion. However, we did crush the market returns in September. Not that really means much, but it always feels good when you exceed the market returns by about 4 or 5%. But on an overall basis, we didn't hit the 3% monthly target. But let's go through the trades. And the primary reason why we didn't hit the monthly target was that there was a large volatility expansion in September. There were about 2 or 3 days where VIX increased substantially, which means that your existing positions are going to go against you, considering that once you make a trade, you end up committing. And if volatility expands, then your existing trades will end up increasing in value. And remember, when we sell options, we sell it for a higher price and then buy it back at a much lower price. So if volatility expands, then the price of the option that we already own ends up going up in value. But let's go through the trades. I think that you'll learn something valuable from this month's trade alerts. Overall we did really, really well. We did a great job in trading. So there's definitely something that is valuable that you can learn from the alerts. All right, September 1st, made a trade in MasterCard, B+ grade, Amazon. It's a spread. Actually, I made a mistake. It wasn't a spread. It was we rolled it up. So I took the existing position for 2,300 and then I increased it from 23 to 25 and I picked up an incremental $280. So the original is there. So we picked up 935 plus an incremental $280. The original was showing a gain of $700. All right, so we're trading at a year-to-date high. And actually, to go back to this real quick, so if we sell it for 700, then, or rather, if we sell it for 935, then yeah, so our total amount of credit in there is going to be around $1,200. All right. We bought back Robinhood. Closed at 70 cents. I bought it back just because I didn't feel comfortable holding it, and we had a chance to close it out for a small gain. Closing trade for PayPal. The original. Here volatility is low, it's around 16. So I want to close out some winning trades and increase buying power in case volatility expands. That was actually a really smart decision. Very smart. September 2nd. Open up a new position on MasterCard. So S&P was up, volatility was also up. September 3rd. So new opening trade on MasterCard. B+ grade, then I give the spread leg. Again, if you want to take the trade alerts, you can take the 7-day trial. You can enroll. It's only $19 for 7 days. You can join at beststockstrategy.com/memberships. That's beststockstrategy.com/memberships. The S&P was down slightly and Amazon was up $15. September 6th, the market was closed. September 7th, bought back Amazon. So we made about $1,146 in profit there. VIX is up over 10%. MasterCard is up $7.50. Alibaba's up. So closing trade. So basically, I bought back the roll, but more importantly, I was able to roll down Alibaba from 140 to 135, and therefore providing an incremental $500 of safety net. So this also was incredibly valuable, considering that right now, I think it's October 2nd, Alibaba is trading at about 144. So to get an incremental $5 of safety net is very valuable. September 8th. S&P is down 10. Closing trade for MasterCard. Collected about $170, closed it out for $30. S&P is down 6. September 9th. Doesn't look like there were any trades that day because the S&P was down 20 and volatility was up around 5%. September 10th. Closing trade for MasterCard. Original is there. Sold for $140 and bought back for $60. Roll Baba. So what I did was I bought back the 135 and then I sold the October. So I felt that it was more important to increase the strike and to decrease the expiration because I want to get rid of that position as quickly as possible. So I bought back the 135 November and then I sold the October 22nd 140 and then I financed it by selling some puts and selling some calls, and I collect an overall credit of about $2 for that. And my rationale for this is that I want to get rid of BABA ASAP. New opening trade for UNH. Closing trade for Fiverr, filled at 58 cents. So that's about a 50% plus profit. New opening trade for Amazon, picked up close to $700. S&P down 35. So you can tell here the volatility is spiking a little bit. VIX is above 20. And you can see that there's an increase in the intraday volatility as there's about a 63-point move between high and low. VIX is down 7%, S&P up around 22, closing trade, the original is there. Closed for a 65% profit. BABA is a small problem, but nothing to worry about. S&P is down 11. So it looks like here the market rallied heading into the close where the S&P was down 11, and then it rallied up by about 21 points over the last hour and a half. And again, you see the intraday range of about 50 points. So you can tell that volatility is increasing as the intraday trading range is significantly picking up. It seems that the market is confused about which direction it wants to go. For us, this is fine. At the moment, I prefer to sell calls on something like Tesla, Google, UNH, but it's best to wait for a good entry. September 14th. Sold some calls on Google and UNH. And then I bought back UNH just a few hours later for a large profit. Showed a 40% profit in a few hours, so I just closed it out. I wanted to sell calls on Goldman. I should have done that. I remember that. It was up around $7. And I think it actually closed down that day. Yeah. S&P was down 25. VIX and VVIX up slightly. I'm surprised the volatility was not up more. Microsoft selling some call option. B plus grade. Amazon B plus grade, picked up over $1,200 of premium. Alibaba. So I closed out the 152.5, and then I sold the 150, and then I financed it by selling 2 of the 185 calls. MasterCard, new opening trade B plus. I rolled the other one for Alibaba. S&P was up 38. BlackRock sold the 185 B plus grade. Amazon sold 2 of the 2300 puts, picked up about 940. Closing trade for MasterCard, 30% profit in one day. S&P down 7, volatility is mixed. Okay, September 17th, Alibaba, we did an adjustment where, remember previously where I rolled it from November 135 to the October 22nd 140, so here I actually rolled it back down to 135, and I also decreased the expiration from October 22nd to October 15th. So adjustment for BABA, and then I financed it by selling some calls and also selling some puts. VIX is down. I think I meant S&P is down 18. Volatility is up. So not the VIX is down 18. S&P is down 18. New opening trade on MasterCard. B plus grade. S&P was down 40. VIX spiked up over 10%, and VVIX was up around 6%. Our BABA puts and calls expired today. We adjusted BABA and also opened a new trade in MasterCard. The volatility spike affected our Amazon position, but that's only short term because Amazon would have to fall more than 15% for us to start thinking about rolling it. What that means is that eventually the time decay will overwhelm the increase in implied volatility, and the money that was lost, quote unquote, today will be credited back as the option decays. I'm looking forward to next week. We will be more conservative at the start of next week because I want to ensure that there isn't a continuation of the pullback. September 20th, the S&P is getting crushed. VIX is up 20%. We're down money due to the volatility expansion, but none of our positions are being challenged. With high VIX, that means the option prices increase, but don't try to guess the bottom. It's best to be patient. Then the S&P rebounded. I remember this was the day when it was down around 120 points, and then it closed only down around 75. Yep. S&P down 75. VIX was still up 20%. VVIX up 15%. The S&P closed over 50 points off its low. It's a very good sign. In an ideal situation, the market would decline and volatility would remain high. It's important to keep a large safety net. Amazon is nowhere close to our strike, and our current position likely won't even need to be rolled. But if those who trade too aggressively oftentimes run out of buying power and are forced to make trades that cost them a lot of money. September 21st, good opening. S&P is up over 27. The market is unsure directionally about where it wants to go. We didn't make any trades that day. The market was relatively flat. S&P down 3.5%. VIX was down 5%, and VVIX down around 6%. I remember in late February 2020 when the market started going down, and then the first week of March, there was a large rally, and the S&P rebounded and recovered almost all of its losses. However, the second and third week of March were disastrous. I definitely don't believe that this is going to happen right now, but I believe it's important for us to not jump in too soon. Also, don't think you're quote-unquote missing out on anything by not being super active, because if the market corrects, you'll end up making 2 to 3 times what you were collecting previously, since volatility will be so high that there will be elevated premiums. As I said previously, when there's a lot of uncertainty in the market, the worst thing you can be is quote-unquote too early. The 22nd, I watched the futures market, and I saw that the futures market on the evening of September 21st and the morning of September 22nd, it pretty much jumped up about 30 points in 5 minutes. I was very, very surprised. It was down 20 and then it was up 10. Adobe, B+ grade. Facebook, B+ grade. UNH, B+ grade. Bought back UNH for about a 40% profit in a few hours. S&P was up 41, VIX down 14%, VVIX down 10%. Let's proceed cautiously, since I don't think we're done with the volatility. I was right. September 23rd, S&P up 30. Bought back UNH. About a 60% profit. S&P was up 53. So notice how the market is acting like a yo-yo. It's down a lot, then it's up a lot. It's very volatile. VIX down 11%, VVIX down 8%. The intraday volatility is significant. The 24th, S&P is down. So what I did here was I bought back the 135 and then rolled it in by 1 week. And then I sold short-dated puts and calls in order to finance it. So I picked up an incremental $19, and I was able to roll it in by 1 week. So it actually expires this upcoming Friday, because right now I believe is October 2nd. Then I also rolled in this one by reducing the strike price from 140 to 135. And I financed that also by selling some puts and calls. So as I said, I rolled in the 135 by 1 week and financed it by selling puts and calls. And I also reduced the strike on one of the November positions from 140 to 135. And I financed it by selling puts and calls. All the puts and calls that I sold expire next week. Also, I'd like to roll in the November positions to October. Sold a put on Nike. And then I bought back the put on Nike. because in like less than 4 hours, it showed me a 40% profit. So September 27th, I opened up a new position on Amazon by selling a put option, B plus grade, picked up $540. New opening trade on Facebook, B plus grade. Trading at a year-to-date high, S&P down 12. VIX was up 5.7. That's actually a large increase in volatility for a small decrease in the S&P. And that portended, or I don't even know if that's a word, it was kind of prescient, or it foretold that there was going to be some increase in volatility later on. The 28th, new opening trade on PayPal, VIX over 20. So here I ended up rolling Alibaba. So I bought back the 160, and then rolled it to 162.5. And I financed this by rolling up the 125 puts to 132. I only rolled one of them. New opening trade on Amazon, picked up over $500. New opening trade on Facebook. Okay, the S&P fell 90, VIX up 28%, VVIX up 16%. VIX is at 24, BABA is up. We were a bit too early with the trades earlier today. It's fine though, none of our positions are close to being challenged. With the exception of Zillow, I should consider selling calls on Z and then rolling it, and then rolling in the expiration a bit. Alibaba. So here I rolled down the 140 to 135, and I financed it by selling puts and calls that expire October 8th. And then what I want to do is I want to roll in the 140s to 135s. S&P down 90. VIX up 24%, and VVIX up 12%. After hours seems relatively stable, but the large spike in volatility is worrisome. So here are the underlyings to watch. September 29th, S&P is up slightly, but it was up almost 30 overnight. Now it's up less than 10. So I'd be very careful because it looks like it can go either way. New opening trade on PayPal, B plus grade. These are the ticker symbols that we're watching. S&P up 7. VIX down 3%. The 30th, S&P up 19. When selling options, our greatest outperformance would actually come from a slow grind down market. where volatility is high and our out-of-the-money puts expire before the market corrects to that level. New opening trade on Dollar General. New opening trade on UNH. So I sold some calls on Zillow. I only adjusted one of them. I rolled it in from November 19th to November 5th. S&P down 52. VIX only up 2.5%. VIX was actually down. And then yesterday, so sold a put on Apple. Then I bought it back because it showed a large profit, 35% profit in less than a day. S&P up 50. VIX down almost 9%. Next week we have BABA and Z. Earlier today, the S&P was down 40. It closed up 50. All right. So that's it for September. I know that yesterday was October 1st, but there were 3 major distribution days in September. One day you had, and actually all of them happened over the past 2 weeks, where one day the S&P was down around 120 and then it rallied to close down 75. Then the other day it closed down 90. And then just a few days ago on Thursday, it closed down around 52. And then, obviously yesterday on October 1st, it was up 50. But that type of intraday volatility is a huge red flag. So I definitely think that October is going to be extremely volatile. So I would recommend being more disciplined than normal. And obviously, I'm not a financial advisor, so don't take anything I say as financial advice. But for me personally, I know that I'm going to be more disciplined and patient because the intraday volatility has significantly picked up.